Good morning. Well, all eyes today are on CBA's financial results, which seem stronger than expected. We'll touch on those in a sec. And the unfolding tension between China and Australia as Beijing has banned importing beef from 4 Aussie abattoirs. Now, the Australian Trade Minister is calling on holding urgent talks with his Chinese counterpart today. Now, looking at the futures, the Aussie share market is set for a bit of another step back today. The futures are eyeing a fall of 1.3%. It really comes as global equities had a mostly negative session overnight, with investors weighing up the economy reopening, while COVID-19 cases in some parts of the world, not Australia, begin to creep up. The Nasdaq snapped its 6-day rally, with investors taking a bit of profits off the table. Apple shares fell over 1%, Microsoft losing over 2%. Elsewhere, stocks set to rally from the economy reopening, like retail, real estate, banks and airliners, dragged the major averages lower. Nike lost about 3%, JP Morgan losing about the same. All in all, the Dow lost 1.9%, the S&P 500 and the Nasdaq lost 2.1% each, while in London their market rose 0.9% and the Euro Stoxx 600 gained slightly. The oil price has risen 6%. It's now $25.27 a barrel as Saudi Arabia pledged further production cuts, and the gold price pushed back above $1,707 an ounce. Now, what to watch today? Well, CBA, the largest of the big four, just reported a jam-packed quarterly report, better than expected. Matt Coleman, the CEO, says CBA is stronger than ever before despite COVID-19, and compared to GFC levels, CBA now holds 3 to 4 times the provisions or allowances for credit losses, and its capital ratios are more than double on a like-for-like basis compared to the GFC. Now, net profit came in at $1.3 billion in the quarter, excess liquidity of $188 billion, which is assuring for shareholders as it should be able to continue to pay dividends. As for the COVID-19 impacts, CBA reported $1.5 billion in provisions, allowing for future loan losses. And this was better than Bell Potter analysts expected, given their strong surplus cash. However, the total provision for future losses now stands at $6.4 billion. Now, CBA also announced a major pivot towards becoming a simpler bank, selling its majority 55% stake in Colonial First State for $1.7 billion. And that sale is 15.5 times more than the profit from the division in itself. Now, the sale is of course subject to APRA and Foreign Investment Review Board approval. However, it should be completed in the first half of next year. CBA is backed by Bell Potter. It's got a 12-month price target of $72, and it looks like it'll push higher just based on the lineup of buyers at the open. Property group Stockland SGP also reports results today, and now just for a trading idea, Bell Potter Rose Premier Investments PMV's price target to $18.50, implying 21% share price growth in a year from yesterday's close of $15.42. Now, it comes as sales are up 99% over the past 6 weeks, and it's going to reopen stores in Australia this week and in New Zealand as well. And PMV's balance sheet is also remaining strong. I'm Jessica Amir with Bell Direct. Happy trading and stay safe.